The Federal Reserve Chair Jerome Powell has assured markets about future interest rate policies, indicating that a rate hike is unlikely. Powell's remarks sent ripples through financial markets, shaping investor sentiment and sparking significant market movements. He reaffirmed the independence in rate decisions, emphasizing the Federal Reserve's nonpartisan approach to interest rate determinations. He underlined that political considerations do not influence the bank's decision-making process, which could result in detrimental consequences. Powell also emphasized the importance of maintaining stability in the balance sheet reduction process to avoid market disruption, signaling a cautious approach to provide economic support without compromising financial stability, and also warned that inflation remains elevated, underscoring the uncertainty ahead and the need for continued vigilance to manage price pressures effectively. Following Powell's statement, stock markets responded positively, with the Dow surging over 500 points, demonstrating investor confidence in the Federal Reserve's stance on interest rates and economic stability. NASDAQ and S&P 500 all made a 0.3% gain, respectively. Let's further discuss this now with Naeem Aslan. He is the Zay Capital Markets Chief Investment Officer, and he joins me now live from London. It's good to see you. Thank you for being with us on the program. So how significant is the remarks that came from Jerome Powell's and him saying it's unlikely possibility of the next policy rate hike, and what implications would it hold for investors?
Sure. Thanks for having me. Look, I think in the message, in the commentary, in the written statement, there were three important elements for investors. And we will classify them as the good, the bad, and the ugly. The good is that, of course, the market has shared the fact that, okay, Federal Reserve is not thinking about increasing the interest rate, because market participants have been very much concerned, given where inflation is, that the Federal Reserve may actually increase the interest rate. Now, of course, the bad at the same time is that if the Federal Reserve, okay, is not going to increase the interest rate, but given the performance and their confidence in inflation, they are not going to reduce the interest rate anytime soon as well. And I think that is something which isn't very much priced into the market, because the market is paying more attention to the fact that with the goods, which were, again, the Federal Reserve said that there'd be no risk that they see in relation to the US economy going into stagflation or higher interest rate. But the ugly part is that they are not satisfied with the performance of inflation and how that is performing. And they have not shown any considerable confidence or any confidence in the current inflation reading. And this remains a very key point for many investors and traders. So the question really is the fact that we know the three important elements, the good, the bad, and the ugly in the report. Where do we go from here? From investors' perspective, the important point is that we have to pay attention to one thing, and that is your data and data and data. So now going into tomorrow's US non-farm payroll economic number, or let's just call that as a data, the most important mother of all economic points data, is going to be the most important for many investors and traders, because if the Fed has confidence in the US economy, it is mainly because of the US labor market. And if the labor market begins to deteriorate, then the situation can change.
Right. We did see the stock market respond positively to the Federal Reserve Chair Jerome Powell's statement regarding the unlikely possibility of the next policy rate hike. What other factors contributed to this reaction that we're seeing?
Well, as we kind of mentioned, that the most important factor is that the relief among investors and traders on the very fact that they don't think that the Federal Reserve is going to increase the interest rate, because that has been the biggest worry among investors and traders. And the second one is a bit more technical, is on the Federal Reserve's balance sheet and the run rate that they have. That also indicates that the Federal Reserve is not going to be hawkish, meaning they're not going to increase interest rate. And there was, at the same time, there was a signal, if you look at the balance sheet and the reduction and then the run rate of that one, that the next possible move is going to be an interest rate cut. When that rate cut is going to come, how big that rate cut is going to be, that still continues to remain a big question, which is very much dependent on two elements. And number one is your inflation, how inflation will improve. And number two, more importantly, is if the Federal Reserve is going to improve its current inflation target, which still continues to sit at 2%, and we had a very little to no words on this particular target because previously they did indicate or they did say that, okay, perhaps the tools that they use to assess inflation, they are outdated.
All right. The Chief Investment Officer for Zay Capital's Market, Naeem Aslam. Thank you so much for being with us here on the program.
Thank you for having me.